let's delve into the NIO stock. Is this a calm before a sharp rise or just a regular consolidation? We'll also look at volatility, and I'll show you the support and resistance levels after which the stock may start to rise sharply. We'll compare it with Tesla stock, which has recently seen a rise. But let's start from the beginning. The NIO stock continues to be in a rather large consolidation phase, which has been ongoing for more than a month. During this time, the stock has both fallen and risen. Let's look at the volatility to understand what is happening. As we can see, the longer the stock is in consolidation, the more its volatility decreases. At one point, volatility dropped to 60%, but recently the stock has started to move significantly, both up and down with quite large candles. For instance, the stock rises by 5% and then falls by 5%, then rises again by 6%. Because of this, volatility has begun to gradually increase and on some days reached as high as 90%. This is actually very high. Currently, it has stabilized at around 75%. Now, let's look at the volatility smile. As we can see, the volatility smile varies across different expiration dates. We can observe that for short-term expiration dates, the volatility smile indicates a potential sharp rise or fall, meaning investors are pricing in both upward and downward movements. Consequently, call and put options are equally expensive. If we look at midterm forecasts, there's a skew towards put options, indicating a potential decrease in the stock price, while there's no significant growth in call options. But if we look at the farthest options, we see a significant rise in put options and almost no rise in call options. However, I wouldn't say that investors are definitely expecting a drop in this stock. Rather, they are hedging. They are buying put options, which makes put options more expensive than call options. This is absolutely normal, which is why there is such a skew. Now, let's look at historical and implied volatility. Historical volatility is the gray line and implied volatility is the white line. Currently, the white line is much higher than its historical values. This indicates that volatility tends to return to its historical levels. I remind you that you can trade not only on the stock itself but also on its volatility. Let me briefly show you how this can be done. We will develop a strategy using artificial intelligence. We predict that volatility will decrease to 15% by September. Why will it decrease? Because volatility tends to return to its historical values. Therefore, trading it makes sense. Our artificial intelligence has suggested several strategies to choose from. Let's look at one of them. We are advised to sell a put option with a $4 strike, sell a call option with a $5 strike for September, buy a put option with a $4 strike, and buy a call option with a $5 strike for November. Yes, this strategy seems complex. It is one of the most complicated strategies because it involves both selling and buying options. It uses both put and call options, different strikes, and most importantly, different expiration dates. It couldn't be more complex. It involves everything: expiration dates, strikes, and the overall strategy is really intricate but also very interesting. Managing this strategy is actually quite straightforward, in the sense that you can easily make a profit with proper position management. But again, I showed this exclusively to illustrate how it might look. I am by no means recommending that you open this strategy, as you really need to understand how options work. Now let's look at the most important thing: support and resistance levels. What is happening here? As we can see, we have very high volumes at the $5 and $4.50 levels. These are huge walls of options, and as we see, we have not yet been able to overcome the $5 level. We tried to reach this value but have not been able to break through it yet. The same is true for the $4.50 level. Currently, we are moving below these values. We also have very strong support levels at $4.50 and $4 according to the put options. As we see, the stock has currently stopped at around $4.50. If we break through this level, the stock may continue to fall further, but again, this is in the short term, concerning the next few weeks and months. Now we can look at the open interest in options. The open interest is at the $5, $10, $4, and $5 levels for put options. I also remind you that we will have a report in September which we will follow and see what happens. Let's now look at market forecasts and what the market predicts for this stock. If we look at the end of August, the market forecasts the stock to be between $4 and $4.50. This suggests that the market expects the stock to remain within this range, where it currently sits. If we look at the end of the year, the market forecasts the price to be between $3 and $4, indicating a decline in the stock. However, the market currently has all the available financial information. If a new report comes out with new data, the stock could rise, and the market might revise its forecast. This current forecast is based on the available information. I will also show you the 3D volatility chart, which centers all the information on options, expiration dates, and strikes. Professionals often use this to create strategies. However, let me remind you that I cannot predict price movements. I don't know where the stock will go. My main task and goal are to manage positions effectively, which means I design strategies to profit regardless of the stock's direction. Now, I will show you one such strategy. Let's consider a scenario where if the stock rises to $8, we can make about $3,000, and if the stock falls to $1, we can make $6,500. This means that no matter where the stock moves, I would potentially make a profit. There is a small loss here, but this loss can also be managed through proper position management. This is what proper position management entails: selling options at the right time, buying options at the right time, and locking in profits. This is what I always advocate and talk about. Let's quickly look at Tesla's stock. Tesla's stock has indeed risen significantly by 50%, while NIO stock has not moved much. There were attempts, but it continues to consolidate. I remind you that NIO stock is currently still unprofitable, and we need to look at its report. When it becomes profitable, many things might change. Again, if you are a long-term investor and believe in this stock, it might eventually rise to $10, $20, but this could take more time, possibly years. If you are a long-term investor, you can simply buy these shares, hold them for a while, and wait for the stock to start growing. If you have any questions, feel free to email me, and I will try to personally explain everything. I also remind you that I have started a new experiment from scratch, where I show how I form a portfolio, which trades I open, and which trades I close. Everything is as transparent as possible, and the portfolio is absolutely real. So be sure to watch these videos. If you have any questions, write them in the comments, and I'll try to answer all your questions. Good luck to everyone.